nightly business report.
Good evening. Tonight, according to the Sri Lanka Tourism Development Authority, the country's tourism industry achieved a major milestone in January of this year when it welcomed over 200,000 visitors. Concerned about increased costs and diminished competitiveness, Sri Lanka's tea exporters are pleading with the government to reconsider their proposal to do away with the suspended VAT scheme in April of this year. On the week's last trading day, the market picked up steam, with the S&P SL20 continuing its upward trajectory and the ASPI displaying an upward trend following yesterday's losses. And as investors processed a barrage of important quarterly reports, US stocks closed a tumultuous session higher. Tesla's positive remarks helped to counteract Microsoft's underwhelming projections.
From Studio 24, here's Anuradhi Vikramasinghe.
Good evening and thank you for joining us. Sri Lanka has welcomed over 200,000 tourists in January of this year, marking a significant milestone for the country's tourism sector, according to the Sri Lanka Tourism Development Authority. This surge in visitors highlights the island's growing appeal as a top travel destination.
Sri Lanka saw 212,838 tourists arriving on the island as reported by the Sri Lankan Tourism Development Authority. India led the list of tourists' arrival with 37,383 visitors, followed by Russia, Britain, Germany, China and France. The surge in international arrivals reflects growing interest in Sri Lanka as a prime travel destination. The country is now poised to make significant strides in its tourism sector with a goal of attracting 3 million tourists in 2025. This target comes after a projected 2.1 million visitors in 2024, signaling a positive trend in the recovery of the tourism industry. Sri Lanka's tourism revival is seen as a key driver in its economic recovery following the challenges faced in recent years. The government and tourism authorities remain focused on ensuring that the sector continues to thrive, further bolstering the island's economy.
Sri Lanka has raised its renewable energy target from 70% to 100%, aiming for a complete transition to clean energy. The announcement was made by Professor Udayanga Himapala, the Secretary to the Ministry of Energy, during a forum organized by the Asian Development Bank on power sector reforms. Udayanga emphasized that the new policy would prioritize a people-centric energy transition, ensuring it remains equitable and affordable for citizens. While no specific timeline for achieving the net zero target was provided, he highlighted the importance of an integrated approach and public participation. This new goal builds on Sri Lanka's commitment to meeting 70% of its energy needs from renewable sources by 2030 as part of its pledge to the Climate Vulnerable Forum to achieve 100% renewable energy by 2050. Sri Lanka's tea exporters are urging the government to rethink its plan to abolish the suspended VAT system in April this year, citing concerns over higher costs and reduced competitiveness. The Tea Exporters Association has raised concerns over the government's plan to abolish the suspended VAT system, warning that it could severely impact the industry's cash flow. According to the TEA, removing the SVAT mechanism would place an additional working capital burden of approximately 5 billion rupees per month on exporters. The association cautioned that this shift could lead to credit expansion without generating domestic value or additional tax revenue for the government. While the move may provide short-term cash flow relief for the government, the TEA argued that the costs associated with VAT collection and refunds would negate any potential fiscal benefits. The association also highlighted that delays in VAT refunds could force exporters to take on high-interest loans, further straining their finances. Smaller exporters who make up to 15% to 20% of total tea exports are particularly vulnerable in these changes, which could impact auction prices and demand. The TEA is urging the government to reconsider its decision to ensure the continued competitiveness of Sri Lanka's tea industry in global markets. The Chamber of Young Lankan Entrepreneurs has reinforced its commitment to Sri Lanka's economic growth with the launch of several pioneering initiatives, including the COYLE Future Founders Program. This program is designed to inspire and mentor the next generation of entrepreneurs by providing seed funding and guidance. One notable example of COYLE's efforts is the souvenir shop at DSN Anayaka College, which helps students develop entrepreneurial skills. Through these initiatives, COYLE empowers youth to embrace challenges, think creatively and prepare for successful careers. The organization continues to foster a culture of entrepreneurship, contributing to the development of a resilient and innovative economy in Sri Lanka. Let's take a short break now. This is the Nightly Business Report. Welcome back to the Nightly Business Report. The market gained momentum on the final trading day of the week, with the ASPI showing an upward trend after yesterday's losses, while the S&P SL20 continued its positive movement. For further insights on this, we speak with Akna Thennekun from First Capital Holdings.
Thank you. The Colombo stock market experienced a somewhat volatile session today, with the all-share price index closing slightly in the green at 17,122, marking an increase of 0.04%. Central Finance, Colombo Fort Land and Building and Ambion Holdings were the main contributors to this modest rise. However, despite the ASPI's slight improvement, the number of negative contributors outweighed the positive ones. H&B, Melster Corp and Access Engineering were the largest negative contributors to the index. Both retail and high net worth investors participated in the market today, with notable activity from high net worth individuals. Blue chip companies and certain banking sector entities drew significant attention from investors. Turnover for the days to reach 5.1 billion rupees, reflecting a decline from the monthly average of 7.3 billion rupees. In terms of sector contributors to turnover, capital goods led with 33%, followed by banking and food, beverage and tobacco sectors, which jointly contributed 25%. The release of quarterly earnings from many companies played a key role in today's trading dynamics, with strong performers attracting increased investor interest. The market's overall sentiment was shaped by these earnings reports, highlighting the importance of corporate performance in driving investor decisions. Thank you.
The market started the week on a strong note, with the ASPI showing an upward trend and the S&P SL20 continuing its positive movement, while midweek saw mixed momentum. The market regained strength towards the end and closing the week on a positive note. For further insights, we speak with Dimantha Matthews from First Capital Holdings.
Thank you. So it has been a very volatile week for the Colombo bourse. In addition, for the daily volatility, we are also seeing intraday volatility also taking place, with significant ups and downs coming in. So there seems to be a lot of selling pressure that is there in the market since we are coming into the month end. However, with some of the good results that are coming out, we are also seeing some amount of renewed buying interest on selected counters as well. So overall, over the last couple of days, we are seeing the overall market being rather flat, and with it, which means that there is some amount of buying interest also that is coming in place. Overall, on the foreign front, we are seeing a significant level of negativity, where there is a net foreign outflow that is accelerating as the week progressed, and we see that some of the foreign outflow is coming out of the blue chip counters. In terms of turnover has been significantly high, with over 5 billion of turnover on a continuous basis. We are seeing interest coming in the banking sector counters predominantly. However, in addition to that, we are seeing diversified sector counters and also some amount of interest in the construction sector counters as the week progressed.
Gold prices surged to a record high today, on track for their best month since March of last year, as investors flocked to the safe haven metal amid rising concerns over U.S. tariff threats. Spot gold rose by 0.2% to $2,798.96 per ounce, marking a more than 6% gain for the month, while briefly reaching an all-time high of $2,800.99 earlier. U.S. gold futures also saw a slight increase, rising 0.1% to $2,826.50. President Donald Trump's renewed threat of 25% tariffs on imports from Mexico and Canada fueled safe haven demand for gold. Investors are also awaiting a key inflation report, with any downside surprise potentially boosting expectations of earlier rate cuts by the Federal Reserve, further supporting gold prices. Oil prices rose in Asian trade today, supported by dip buying, but were still on track for a second consecutive week of losses, as traders remain concerned about the potential impact of trade tariffs under U.S. President Donald Trump. Brent oil futures for March gained 0.4% to $77.21 a barrel, while West Texas Intermediate crude rose 0.5% to $73.13 a barrel. Both contracts were down between 1.7% and 2.3% for the week. Oil prices have been pressured by fears that Trump's tariffs could disrupt global demand, particularly from China, a major importer. Additional concerns over the impact of artificial intelligence on energy demand and a larger than expected build in U.S. inventories also weighed on the market. The Sri Lankan rupee has weakened against the US dollar today compared to yesterday. According to the Central Bank of Sri Lanka, both the buying and selling rates of the US dollar have risen. Let's now take a closer look at how the Sri Lankan rupee is performing against other major global currencies. A short break now. This is the Nightly Business Report. Welcome back. David Pires Renewable Energy has joined forces with DFCC Bank to make solar energy more affordable and accessible to customers across Sri Lanka. This partnership aims to enhance the adoption of clean energy solutions in the country.
David Pires Renewable Energy has partnered with DFCC Bank to provide affordable solar energy solutions across Sri Lanka. The collaboration, formalized through a Memorandum of Understanding, aims to offer attractive financing options for solar energy systems and Kalpak hot water systems. DFCC Bank will provide personalized loan packages based on customers' eligibility, while DPRE will offer exclusive solar solutions to DFCC customers. Customers can access loans with low fixed interest rates and a 5-year repayment period, making solar energy more accessible to both homes and businesses. This partnership is designed to reduce the burden of high upfront costs, facilitating the widespread adoption of green energy solutions. DPRE, a trusted member of the David Pires Group, offers a range of solar solutions, including on-grid, off-grid and hybrid systems, along with energy-efficient Kalpak hot water systems. The collaboration represents a significant step in accelerating Sri Lanka's transition to sustainable energy, aligning with the country's environmental and economic objectives.
Techno City Private Limited, a leading IT distributor from Sri Lanka, has officially expanded its operations to Dubai, marking a significant milestone in its growth. Known for its partnerships with global IT giants such as HP, Asus, MSI and Lenovo, Techno City aims to bring cutting-edge IT solutions to the UAE market. The company's diverse portfolio includes IT hardware, office automation solutions and high-performance gaming components, with a special focus on Xerox printers and gaming gear. Techno City sets itself apart with its strong commitment to after-sales service, offering reliable support through a dedicated service center. With a legacy of excellence, the company aims to redefine the IT distribution landscape in the UAE. Heritage Hotels and Resorts, the flagship brand of Aitken Spence Hotels, has announced its continued partnership with the Galle Literary Festival 2025. The brand will serve as the exclusive sponsor for the festival's opening night.
Heritage Hotels and Resorts, the flagship brand of Aitken Spence Hotels, continues its partnership with the Galle Literary Festival 2025, serving as the exclusive sponsor for the opening night on 5th of February. Rooted in a legacy of cultural preservation, Heritage aligns with the festival's ethos of creativity, intellectual discovery, and Sri Lanka's rich artistic heritage. The opening night will offer an immersive experience, blending tradition and innovation, which are core values of the Heritage brand. The event will bring together renowned authors, literary figures, and thought leaders, providing guests with an enriching evening of conversation and cultural celebration. A highlight of the evening will be a curated culinary experience by Heritage Ahungalla, featuring fusion cuisine inspired by traditional Sri Lankan flavors. This collaboration underscores Heritage's commitment to fostering creativity, cultural sustainability, and delivering exceptional hospitality. By sponsoring the festival, Heritage further strengthens its role in championing Sri Lanka's artistic and cultural legacy.
Nine Worlds Hospital has launched its state-of-the-art gastroenterology and endoscopy service, marking a significant milestone in expanding its healthcare offerings. The new unit provides advanced diagnostic and therapeutic solutions for various gastrointestinal conditions, catering to the needs of the entire family. Equipped with cutting-edge technology and staffed by skilled gastroenterologists and surgeons, the service aims to deliver world-class care. Endoscopic procedures, which are minimally invasive, are crucial for diagnosing and treating conditions like acid reflux, gastritis, and colorectal cancer. This launch aligns with Nine Worlds' vision to be a trusted healthcare provider, setting new benchmarks in healthcare excellence for the Sri Lankan community. John Keel's Logistics Limited recently marked the 10th operational anniversary of its successful partnership with Akzo Nobel Paints Lanka Limited, celebrating a decade of collaboration and growth.
John Keel's Logistics Limited recently celebrated the 10th anniversary of its partnership with Akzo Nobel Paints Lanka Limited, highlighting a decade of successful collaboration. The event reflected the shared achievements of both organizations, showcasing their strong and enduring relationship. To express gratitude, JKLL presented tokens of appreciation to both past and present staff from Akzo Nobel and JKLL, recognizing their invaluable contributions. In return, Akzo Nobel also presented JKLL with a token of appreciation, underscoring the strength of their partnership. The leadership teams from both companies reflected on the foundation of their relationship, emphasizing mutual support, adaptability, and innovation. Over the years, JKLL has consistently provided flexible pricing models, operational efficiencies, and sustainability-focused solutions. This lasting partnership stands as a model for industry collaborations, setting high standards for operational excellence and sustainable growth in Sri Lanka.
Sri Lanka Telecom Limited has partnered with Samurdhi Bank to drive its digital transformation through the introduction of FinOps, a homegrown digital core banking software. Developed by SLT Services' in-house team, the FinOps system is designed to modernize operations across Samurdhi Bank's network of over 900 branches. The platform features advanced capabilities, including intuitive digital interfaces, a mobile application for field collections, and automated workflows. Additionally, the Samurdhi digital banking system enhances the efficiency and transparency of the Samurdhi program, giving beneficiaries online access to a range of banking services. This collaboration marks a significant step in optimizing financial services and improving accessibility for Sri Lankans. Let's take a short commercial break. Global business updates coming on the other side. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Asian stocks showed mixed results today as investors remain cautious amid US President Donald Trump's threat to impose steep tariffs on the BRICS bloc. Regional trading volumes were muted due to market holidays in China, Hong Kong and Taiwan for the Lunar New Year. Japan's Nikkei 225 index saw a slight rise while the Topix index remained flat. Australia's ASX 200 gained 0.3%, briefly reaching a record high of 8,566.90 points, driven by expectations of an interest rate cut by the Reserve Bank of Australia in February. Meanwhile, South Korea's KOSPI dropped 1.3%, hit by losses in major chip-making and tech stocks, mirroring global declines this week. US stocks ended a volatile session higher as investors digested a stack of key earnings reports, with upbeat comments from Tesla hoping to offset a disappointing forecast from Microsoft.
U.S. stocks ended higher on Thursday as investors digested a stack of key earnings reports, including from mega-cap tech companies. The Dow gained almost 0.4%, the S&P 500 added more than 0.5%, and the Nasdaq climbed 0.25%. Shares of Apple ended lower and dropped further in extended trading after the tech giant reported weaker iPhone sales and revenue from China during the holiday quarter. Intel, up more than 1% at the close, rose further in extended trading after its fourth quarter revenue topped expectations. Tesla shares ended higher after CEO Elon Musk vowed to launch long-awaited cheaper EVs in the first half of 2025 and start testing an autonomous ride-hailing service in June. His comments overshadowed quarterly results that fell short of expectations. Meanwhile, shares of Microsoft plummeted more than 6% after forecasting disappointing growth in its cloud computing business. The CEOs of both Microsoft and Meta platforms defended their heavy investments in artificial intelligence days after a new AI model from Chinese startup DeepSeek rattled Wall Street and triggered a sell-off in AI-related stocks. Research from market tracking firm Vanda showed that retail investors poured $1 out of every $3 of their investments into NVIDIA shares after the AI chip maker suffered its record one-day drop earlier this week.
Apple shares rose in aftermarket trading after the company forecast higher sales than Wall Street expected, a sign the company expects iPhone sales to recover as it rolls out artificial intelligence features.
Apple shares rose in aftermarket trading Thursday. That's after the tech giant forecast iPhone sales for the quarter ending in March would rise higher than Wall Street expectations. The firm also beat Wall Street estimates for total sales in its first quarter, raking in some $124 billion, just ahead of expectations. It saw a boost in revenue from services such as iCloud and various streaming businesses, up nearly 14% from the previous year. That made up for weak iPhone sales, which were hit by stiff Chinese competition and a slow rollout of AI features in newer phones. Sales of the phones in Greater China declined, with revenue in the country down 11%. The company is rolling out AI features that can do things like transcribe phone calls, but has yet to secure a local partner in China for such services. Meanwhile, sales of iPads and Macs for the first quarter were stronger than expected. They benefited from a new lineup of devices with more powerful chips.
And that's all we have from us here today on the Nightly Business Report, wrapping up the week. We'll see you again on Monday with the latest updates across the business globe. Till then, I'm Anuradhi Vikramasinghe. Thank you very much for watching. Have a great weekend.